Hello guys, you are welcome to Starry Gold Academy Advanced Taxation Live class. Today, 6th of November 2021. Bola Tito, you are welcome. Vivian, you are welcome. Ibrahim, you are welcome. No, SFM will be tomorrow morning. Okay, SFM will be tomorrow morning. Once again, you are welcome to Starry Gold Academy live class on advanced taxation for this diet November 2021 examination of the Institute of Chartered Accountants of Nigeria at the professional level. Now, the exam is about 2 weeks to come, and it is very important for us to take you guys through some examination tips. What are the things you need to know before the exam date? On what do you need to prepare yourself? What do you need to get ready for the exam? First of all, you have to ensure you get to the examination hall 30 minutes before the exam. Get to the examination hall 30 minutes before the exam. Not only that, make sure that you get there very early for you to identify your seat if possible. Do not assume that you've been writing the institute exam for some diets and therefore the system is not new to you. Okay, so please try as much as possible to get to the examination hall at least 30 minutes before the exam time. Okay, 30 minutes before the exam time. Once you get to the exam hall, you don't need to get panic. Okay, do not panic, as that will increase your level of anxiety, thereby making you easily forget what you already know. Okay, so you don't need to be panic. Take your time, look calm, look good. Okay, so that whatever you have been doing all these days is enough. What you have been studying all this while is enough for you to pass this exam. So that's why you are advised to get to the exam hall at least 30 minutes before the exam time to avoid any level of anxiety. If you are giving the exam's question paper, the first thing to do is for you to read carefully the instruction to have a better understanding. Read carefully the instruction for you to have a better understanding. Okay, so because students make some mistakes at times, you believe that yes, I know this, I know that. Okay, so for instance, where the examiner have asked you to attempt just two questions out of 3. Okay, but because you feel like yes, I know everything, you now decide to provide solutions to the 3 questions you have. Okay, so because of your oversabi, the examiner may decide to score you down. Okay, so please, I cannot appreciate oversabi. Okay, you should always act as instructed. Okay, no dey do pass yourself. Okay, now that's taken. If you come across any question you don't understand, don't be scared and start wasting time on the question. Of course, what you need to do is to start with those questions you are good on, the ones you are competent of, the ones yes, these won't take much of my time. Okay, so these are types of questions you should start with. Do not start with those questions that will tie your time. Don't start with questions that will tie you down, that will take most of your time. Just go ahead and answer the ones you already understand and then come back to the tough ones later. It's not necessary you attempt the compulsory question first. Okay, so except where you know that the compulsory question, that is the number 1 question, is one of the questions you are good at. Okay, so it's one of the questions you can rate yourself 4 to 5. So if you have familiarized yourself with the topic tested in that question 1, you are good to go. But if no, please avoid that and proceed with other questions. So you have 7 questions, of which you have to answer 5. In fact, you can start with a question that has just 50 marks. Okay, so your exam structure is into 3 parts or section. Your part 1 or section 1 is the compulsory question, which is always the question 1, and your part 2, which is the section 2, you have 3 questions you have to answer to, each of which has 20 marks. And your section 3 question, your section 3 or part C question has 3 questions, each of which has 15 marks, and you have to answer 2. The section C or part C has 3 questions, which you have to answer 2 with an equal mark of 15. Are we together? So make sure you conclude and round up your work at least 10 minutes before the scheduled time so that you can cross-check your work properly. Make sure you round up your work at least 10 minutes before the scheduled time so that you can cross-check your work properly. Are we together? Okay. We equally have some additional tips for you guys. Yes, you might be thinking they are not necessary or they are not much material. Okay, but in practice, these little tips go a long way. Okay, it goes a long way. Now, your basic readiness is just like a farmer going to farm without cutlass, without hoe, and without even using any modern farming equipment. Tell me, when he gets to the farm, what is he going to do? Okay, what will he be doing there? Okay, so as a student going for an exam, you are expected to go there with all your gadgets, such as your writing material and the likes. Okay, so go with your biro. At least 2 biro is okay for you. Go with your ruler where necessary. Your exam docket is compulsory, because without the exam docket, you will not be allowing for the exam. So your exam docket is like your international passport while you are in the embassy. Okay, so you must go with your exam docket. In fact, it's advisable for you to always drop your exam docket in your bag if you are using bag a day before the exam, so that on the exam day you won't be frustrated or furious about where you place your exam docket. Also, make sure you go into the exam hall with your calculator where necessary. If you are writing advanced taxation, calculator is a must for you. So don't expect that someone else will come to the calculator with some spare, okay, that maybe probably you can borrow, okay. So it's always good to have your own equipment and avoid unnecessary waste of time. Prepare yourself mentally, emotionally, and psychologically. Make sure you are ready physically and mentally by sleeping well a day before the exam. All what you have been learning all these days is enough for you to pass the exam. Believe me or not, if ICAN should postpone the exam to 2 months later, in fact to March next year, your students that have been preparing for the exam since June or July will still be demanding for more time to cover the syllabus or to prepare themselves well for the exam. Okay, so there's no time that is adequate or enough. Okay, there's not enough time for you to prepare for an exam. So don't overstress yourself. Be 100% focused. Avoid any sort of distraction and panic or fear. So avoid any distraction, panic, and fear. Like I said earlier, self-confidence is a key element of success. If you don't believe in yourself, then how do you expect people to believe in you? Okay, so if you don't believe in yourself, then therefore means you are expecting failure. Okay, so my advice is just that you don't have overconfidence. Okay, so don't allow overconfidence. Okay, so be confident in yourself. What you know is enough to pass the exam. Also, you have to read carefully all instructions at the top of the examination paper. If you have been writing the institute examination for some diets, do not assume, never assume that you are familiar with the instructions given by the examiner, because this is not your first time of writing the exam. You never can tell. The examiner might have decided or may decide to change some instructions, okay, which probably they may be paramount, they may be vital information, they may lead, if considered or if well noted, it may contribute well to your success, and if ignored, it may cause a failure for you. So read carefully all instructions at the top of the examination paper. Do not do over sabi, no dey do pass yourself. Okay, so always start by reading the case study, appendices, and the exam question requirements, taking note of specific demands of the question. Always start by reading the case study appendices and the exam question requirements, taking note of specific demands of the question. Like I used to tell my students, every case study exam or any question with a built scenario, okay, we usually have three forms of question. We have the on case study, we have the off case question, and we have the mixed case study question. Okay, so an on case study question is a question that has to do with the case study, that is with the scenario built by the examiner. While providing your suggested solution, you may have cause to make reference to a particular paragraph or to some parts of the scenario built by the examiner. Are we together? Okay. But in some instances where we have off-case study question, these are question type that you can provide your suggested solution without making reference to the body of the case or to the scenario built by the examiner. For instance, you were asked to discuss digital economy or digital taxation. Are we together? For instance, you have to discuss the loopholes in the tax system in Nigeria. You have to discuss the implications of the Finance Act of 2019 on companies' income tax, or you have to discuss the implications of the Finance Act of 2020 on minimum income tax in Nigeria. Okay, so these are questions you can provide solution to without making reference to whatever scenario built by the examiner. So you need to take specific demands, take notes of specific demands of the question. And for a mixed case question, you make partial reference to the scenario built by the examiner. Are we together? So please make sure when you are providing your suggested solution, they are relevant to the requirements of the exams of the question. Okay, they are necessary and relevant. They have relationship. You relate them with the examiner's requirements. Are we together? Okay, so we read the question requirements very well to ensure complete understanding of what is required of you. We read the question requirements very well to ensure complete understanding of what is required by underlying the key facts of each given appendix. By underlying the key facts of each given appendix. Are we together? Okay. Now let's start. Once again, you are welcome to Starry Gold live class. Click on share to have a copy of this on your timeline. If you are just joining, welcome to the class. Please kindly type hello in the comments box and your location so that I can acknowledge you. Kindly type hello in the comments box and your location so that I can acknowledge you. If you have any question, kindly drop it on the comments box. If you have any question, kindly drop it on the comments box. In regards to this Diet Ican exam, what are your greatest fears? What are your greatest fears? Kindly drop your comments now before we start the class. What are your greatest fears? Okay, Akinshikwe, you are welcome from Covenant University, Ota. Bode, you are welcome from Abuja. How is Abuja today? Hope you are enjoying yourself at Abuja. Please, my regards to Buhari. Oh, Aderomu from Ikorodu. How are you doing today? How is Ikorodu there? How is Ikorodu today? Mr. Bright, are you saying the audio is bad? Please, can you make use of your hands-free? Okay, if you have your earpiece there, you can make use of your earpiece, or you use your Bluetooth device, or you use your AirPod or AirBud, as the case may be. Mr. Muhyiddin, you are welcome. Okay, so Mr. Akinshikwe, you are saying your greatest fear for this exam is that you are not well prepared. If I may ask you, how long have you been preparing for this exam? Okay, from experience, there's no matter if ICAN should postpone the exam from now till March next year. Believe me sincerely, you still not have enough time to prepare yourself for the exam. Okay, so please don't let that bother you. What you have studied is enough for you to pass this exam. Okay, what you have studied is enough for you to pass the exam. What you just need to do is to strategize. What you need to do is to strategize. What you need to do is to strategize. Are we together? Okay, so I know you guys are having issue with the finance arts. Mrs. Williams, she's saying that the finance arts of 2020 is her greatest fear for the exam because ICAN is going to test the provisions of the Finance Act of 2019 and 2020. Oh, and I know the most important students are in doubt, or students are not competent in on the basis period identification of the basis period, or determination, sorry, in the determination of basis period in line with the Finance Act of 2019. Okay, so they are confused that what if I can give a question that has back years period, For instance, the question, the business commenced operation on 1st January 2015. It was still in business and ceases operation on 31st December 2018 or 2019. How do we treat this? Are we going to treat this in line with the requirements of the Finance Act of 2019? Or are we going to use the old rule of commencement and cessation? Yes, of course, any period, any year of assessment, please note that not the year of accounts or not the accounting year end, rather government fiscal year is a period from 1st January to 31st December of every year. Government fiscal year is a period in between 1st January to 31st December of every year. Okay, so the Finance Act became effective. Okay, the Finance Act was signed on January 13th of 2020. Okay, so and for VAT that became effective on 1st February 2020. But in this case for CIT, the Finance Act of 2019 became effective in 2020 year of assessment, became effective in 2020 year of assessment. Okay, so meaning that your 2020 year of assessment, we have a basis period of 1st January 2019 to 31st December 2020, all things being equal, we have a basis period from 1st January 2019 to 31st December 2020, meaning that the implication of the Finance Act or the Finance Act of 2019 will affect this basis period. You don't have any reason of doubt that 2019 in 2019, when the company is carried on their transactions, their business transactions, their financial transactions, the Finance Act is not yet in effect. Yes, of course. Do not forget that your company's income tax is now assessed based on preceding year basis. Your company income tax is assessed on preceding year basis. So, for business that has been in operation, for your 2020 year of assessment, you assess based on preceding year basis, and which of course the basis period would be 2019, from 1st January 2019 to 31st December 2019. Okay, so any business period before this date will be assessed based on the old basis. Another area where students are usually most confused is that when the business commenced operation, for instance, now in a period prior to the date the Finance Act became effective. For instance, when a company commenced business on 1st July 2019, a business that commenced operation on 1st July 2019, how do we assess this company to tax? How do we assess this company to tax? Of course, for business that commenced operation on 1st July 2019, the first year will be assessed taking cognizance of the provisions of the commencement rule, taking cognizance of the old provisions on commencement rule, taking into consideration the old provisions of commencement rule. Why? Because at commencement, the Finance Act is yet to become effective, and as such, the business should be assessed in 2019 with reference to the old provisions of the commencement rule. Now, your question should be, if we are assessing the company based on the provisions of the Finance Act, based on the old provisions of commencement, so it therefore means that the company for 2019 year of assessment, the basis period for 2019 year of assessment will be from 1st July 2019 to 31st December 2019, because the first rule of commencement in the old provision says that the business at commencement should be assessed from the date of commencement to 31st December of that same year. Okay, now the Finance Act has abolished the issue with gapping and overlapping in our basis period. The Finance Act of 2019 has abolished the issue of gapping and overlapping in our basis period. So if a company is to be assessed in the first year of commencement with the old provisions of commencement rule, then what will happen to 2020 year of assessment? So in 2020 year of assessment, the Finance Act has become effective. Okay, Finance Act of 2019 has become effective in 2020 year of assessment. So you first determine your basis period. If you have to go by the rule, by the provisions of the Finance Act, that companies should now be taxed based on preceding year basis. Companies should be what? Companies should be taxed on preceding year basis. So it therefore means that for 2020, for a company that has commenced business, now you first identify their accounting year end date, which is 31st 12, 2019, or let's do it this way. You first identify the date of commencement. Identify the date of commencement. Okay, sorry, let's identify the accounting year end date. So assuming the accounting year end date is 31st December of every year, so the preceding year for 2020 will be 2019. Okay, so because the company commenced business on 1st July, so we can't go beyond the date of commencement, so we still have 1/07/2019. Okay, so now this date has been tasked in our 2019 year of assessment. This same basis period has been tasked. Profits from this period has been tasked in our 2019 year of assessment. So what the Finance Act has done is that it has abolished the issue of taxing the same profits for a particular period, profit for a particular period twice. It has abolished the taxing of profits from a particular period twice. So in 2019 and in 2020 of assessment, there will be no tax payment. In 2020 of assessment, there will be no tax. So you cross it out. Then we go to 2021 of assessment. For your 2021 of assessment, you determine the year end of the company. Okay, so the year end of the company and the preceding year for 2021 is 2020. So we have 31st 12 2020. Okay, and the beginning date will be 1st January 2020. So also note that your basis period should not exceed a period of 12 months. Your basis period should not exceed a period of 12 months because government fiscal year is 12 months. Okay, so the only situation whereby you can have an abnormal period, that is a period of less than 12 months, is upon commencement of a business and cessation. Is when a business has just commenced, okay, and what, and cessation. Any other period apart from this must be a period of 12 months. Are we together? Okay, so Mrs. William, do not get panic. The Finance Act of 2020 is quite clear. If you need further explanation, please always drop your comments or your request, okay, or question on our Telegram page for us to attend to it, okay, for us to address it, and for other colleagues to learn from it. Are we together? So okay, Amushon is saying that I am not sure if I have covered every aspect of the new Finance Act. What are the areas you are looking up to? What are the areas you think you feel you still need to be groomed on? Okay, so what are the areas you need brushing? Okay, please do not hesitate to drop that on the Telegram page for it to be addressed and for other students to benefit from it. Do you understand? Okay. Adewi, you are welcome. Okay, but they is saying that the areas that are likely to be tested this diet, please. it will take God's grace for me to tell you the specific area that is going to be tested in this diet exam. Okay, so just go by your spirits. Okay, Mr. Bode, go by your spirits. I'm very sure that God will direct you. God will surely direct you. Though we never can tell if some of the questions or topics we are taking in today's class is going to be tested. Yes, of course, it happens last diet, but we never can tell. Okay, so it's good for you to prepare yourself. Make sure you understand at least you cover at least 80% of the syllabus. Okay, so and don't forget that work without prayer is nothing, and prayer without work is nothing as well. So while you work, you pray as well. Are we together? Okay, so Mr. Bright is saying, I can't say I have known everything about the Finance Act 2019 and 2020. Please, I'm here for you guys today. If you have any question on the Finance Act of 2019 and Finance Act of 2020, please go ahead to ask your question. I believe to the best of my knowledge, I'll be able to provide responses to your inquiries. Are we together? Okay, so Mr. Bode, thank you. Abuja is fine. My regards to Buhari once again. Okay, so thank you, Mr. Akinshikpe. We are together. Okay, good, Mr. Bright. Now you can hear us clearly. Mrs. Adewi, I believe I've answered your question or your addressed the inquiries that the new Finance Act on basis of assessments. Okay. If you feel that you need more explanation, please do not hesitate to drop your comments. That's why we are here today, to assist you guys. In fact, this class is like an interactive section. Okay, so you can always drop your comments. Surely it will be addressed before our time expires. Are we together? Okay. Please, can I have a copy of the Finance Act 2020 and 2021? I'm not sure if the Finance Act of 2021 has been published nor signed by the president. Okay, but you can have the Finance Act of 2019 and Finance Act of 2020. If you have Google Chrome on your phone, please kindly type Finance Act of 2019 or Finance Act of 2020. I believe you have a lot of articles to download which you can read and groom yourself. Okay, which you can read and brush yourself up. Are we together? Okay. Mrs. Olani Olubumi, you are welcome. From Ilesha, Ondo State. How is it Ondo or Osun? Sorry, Ilesha is in Osun State. How is Ilesha today? Hope you are enjoying your stay there. Mrs. Edith from Kogi, you are welcome to Starry Gold live class. Okay, Mr. Bright is saying that he needs understanding of the dividend basis of assessing taxpayer profits. Okay, dividend basis of assessing profits to tax. Yes, the tax authority has other bases they use in assessing companies to tax, where they feel, in their opinion, that because the tax system we are practicing in Nigeria here is the self-assessment. Okay, we are practicing self-assessment system, tax system, where taxpayers are to assess themselves. Taxpayers are to assess themselves on what tax to be paid. Okay, so when you are given a room for self-assessment, then there should be someone over there that will do what that will cross-check whatever you have done. Okay, that will do a cross-examination on your self-assessment. Okay, so now the tax authority has other bases such as the revenue basis. Okay, they have the revenue basis, that's turnover basis. They have the minimum income tax basis, and they have the dividend basis as well. Okay, so where a company pays dividend, okay, where a company distributes dividend in a particular year, and in that particular year the company has operating losses. Okay, so section 19 of SITA states that the dividend paid in that year will be what we assume to have been paid from the company's profits for that year, that is for the year in which the dividend was distributed, irrespective of whether the company has operating profit or not. So because in the real world, when you have reports losses, you are not expected to share dividend. Okay, though this dividend being distributed is what is from prior year profits, of which the profit has been subjected to tax in the year it was earned. Okay, in the year it was gained. Okay, so now there is this argument that no, this dividend should not be further subjected to tax, or should not be subject to additional tax because it has already suffered tax in the year the profit was made. In the year the profit was made. So of course, based on these arguments, the Finance Act has addressed this, and for some specific industry that pays or that distributes dividend out of profits or out of their retained earnings. Okay, so if the dividend distributed is from the retained earnings, the dividend will not be further subjected to tax. But if the dividend is distributed from the profits before tax for that year, then the dividend will be subject to tax in the hands of the owner, in the hands of the individuals. Are we together? Are we together? Okay, so it will be subject to what? It will be subject to further tax in the hands of the owner. Okay, so now we have section 19 subsection 1 and subsection 2, which has been amended. Now, for companies that has operating losses in a particular year but distribute dividend in that same year, okay, so if the dividend is distributed from the prior year profit, that is from retained earnings, it will not be subject to further tax, so it is tax exempt. However, where a company declare profits for the year, has profit of 1 million naira and declare dividend of 2 million naira, okay, so out of this 2 million naira, 1 million will be taxed accordingly, because it will be assumed that the 1 million naira is coming from the profit for the year, and the excess, that is the other 1 million naira, is coming from the retained earnings. Are we together? Okay, I believe I've answered your question, Mr. Obe. Akinshikpe, please sir, what are all the new topics I can add to the syllabus? What are all the new topics I can add to the syllabus? As far as I'm concerned, the ICAN has only had the Finance Act, the provisions of the Finance Act of 2019 and 2020 as far as it relates to tax, and also some specific provisions of CAMA 2020 as it affects taxation, and some specific provisions of the of Bank and Other Financial Institution Act of 2020 (BOFIA) as it affects taxation. Okay, and some other legislation that was repealed or amended in 2020. Are we together? Okay. Yes, Mr. Obe, if the dividend has not been subject to tax before, it will be taxed accordingly. Okay, it will be taxed accordingly. Timi, you are welcome from Sokoto. How is Sokoto today? Okay, Timi is saying that he needs a summary of okay, sorry, that's your daily. He needs a summary of transfer pricing. He needs a summary of transfer pricing. Ayodele, it will be better if we can draw attention to specific area you need more clarification or understanding, because simply put, transfer pricing refers to how related parties price goods, services, intangible assets, loans and other transactions between themselves, okay, between them. So there's need for transfer pricing regulations because of the aggressiveness of taxpayer in their tax planning, okay, most especially for the multinational companies. For instance, now if you have worked with these Indians, okay, so they do like to hide away from taxes. In fact, if they have their way, they don't like paying taxes. Okay, they don't like paying tax. Do you understand? Okay, so we need these rules or regulations because tax income from taxes is one of the major source of income for the country. Okay, so it's one of the major source of income for the country. So the income generated from this are used in developing the country. Are we together? So transfer pricing rules or regulations are established in various countries, not only in Nigeria, to ensure that related party prices are reasonable and fair. Okay, so most especially for these multinational companies where they know that it is quite cheap or cheaper to do business in a particular country than another. Okay, so now if it is cheaper to do business in that country, but they have significant tax rates, okay, they have huge tax rates, or they have huge taxes to pay there, and they know this other country where doing business is not fine, is not good, but their tax exposure is minimal. Okay, so they may have their factory in that country where doing business is quite good and cheaper for them, okay, and have this other country produce some components that will be used in that other uh country. Okay, so now for instance, now if you are making products ABC and you need component material XYZ to make this product ABC. Okay, so now uh the company in jurisdiction A, the company in tax jurisdiction A is the one operating in a good environment that doing business is quite cheaper, but the tax is at a very high level. Okay, so that company will be forced to buy the product, the material from the jurisdiction B, where the company is operating in an environment that their tax is on the lower side, but the business environment is unfriendly. Okay, so the cost of the component from the company XYZ in jurisdiction B will be higher than that of other companies producing the same materials in jurisdiction A, where we have company ABC. But because of the group policy, company ABC will be forced to buy the products or the material from company XYZ in jurisdiction B. So the company in jurisdiction B will be selling to the company ABC at higher cost. Will be selling to company ABC at higher cost so that they can shift profit from jurisdiction A to jurisdiction B in the name of purchasing materials from company XYZ. Do you understand? So therefore, company ABC in jurisdiction A, we have what? We have high operating costs. And you know what that means? Where you have each operating cost, it will reduce your profit. It will reduce your operating profit. And when you have low operating profits or no operating profits, it therefore means that you pay minimal tax, you pay lower tax, or you pay nothing. You pay low tax or you have no tax to pay. Are we together? Do you understand? Okay, so we need transfer pricing regulations to regulate prices between connected persons or related party. Are we together? Okay, so another importance of transfer pricing is that it ensures transaction between associated enterprises take place at a price as if the transaction was taking place between unrelated parties. So the materials purchased from company XYZ in jurisdiction B, okay, the cost of material being purchased from country XYZ in jurisdiction B should not be more than the prices at which companies in jurisdiction A producing that same material will sell their material in an open market. Do you understand? Okay, so though transfer pricing rules through transfer pricing rules, the companies are able to maintain their business structure in a flexible manner. Through transfer pricing rules, companies are able to maintain their business structure in a flexible manner. Are we together? Do you understand? Okay, so we have we have types of transfer pricing. We have types of transfer pricings. We have the three different ways in which prices can be fixed. We have the market-based transfer prices, we have the cost-based transfer prices, and we have the negotiated transfer prices. Okay, although each method provides a different answer, and their commonality is that transfer prices represent an intra-company market mechanism. It represents an intra-company mechanism. Are we together? So I believe I've partially answered your question. Okay, Mr. Ayodele is saying he needs more understanding on transfer pricing methods. He needs more understanding on transfer pricing method. Okay. Olaniyi Olubumi is saying, is new commencement rule applicable to pioneer capital allowance? Yes, ma. The new Finance Act or the Finance Act of 2019, okay, will affect your basis period for pioneer period if and only if your post-pioneer period falls on or falls in between the basis period of the year of assessment that Finance Act became effective. For instance, a company that is enjoying pioneer status incentives, okay, so it started in 2018, so the first 3 years elapsed in 2020, okay, so we have 2018, 2019, and 2020. Now let's assume that the additional 2 years was denied due to the fact that the company did not qualify for pioneer status. Okay, now based on this, the pioneer period you have to end the pioneer period. Now the rule says that you assess the company for the first year going by from the date after the end of the pioneer period up to 12 calendar months. From the date after the end of the pioneer period up to 12 calendar months. So you go by this rule. So far so good that it will not exceed your basis period for that assessment year. For instance, now, if your pioneer period covers your production day is 1st January 2018, if your production day is 1st January 2018, okay, so your first set of accounts will be to 31st December 2018, first year, and second year will be from 1st January 2019 to 31st December 2019. So don't forget that this basis period is for your 2019 year of assessment, and this second year is for your 2020 year of assessment. Are we together? So, and for this third year, we have 01/01 2020 to 31st 12 2020. This is your third year. Okay, so for 2021 year of assessment. Now, the pioneer provision states that the pioneer legislation states that at the end of the pioneer period, okay, so it will be assumed that the company ceases operation at the end of the pioneer period and commence a new business. It will be assumed that the business is a new business and is going to commence operation. So the rule states that your basis period will be from the first day after the last day of your pioneer period, which is 01/01 2021, to up to 12 months, which is 31/12 2021. Okay, so you all agree with me that the Finance Act has become effective prior to this date, and therefore the provisions of the Finance Act is relevant here, and the year of assessment for this basis period, if companies are to assess on preceding year basis in their year from commencement, okay, so this should be 2022 year of assessment. This should be 2022 year of assessment. Okay, it should be 2022 year of assessment going by the provisions of the Finance Act of 2019. Okay, so now your question should be, what happened if this date is prior to 2020? Of course, if this date is prior to 2020, your old commencement rule takes effect. It's still in effect, and therefore, assuming this is 01/01 2018, your fourth year is 01/01 2018 to 31st December 2018, the commencement rule applies, and for that, the basis period will be what? And the year of assessment will be 2018, being the first year of commencement, and the commencement rule states that for the first year, you identify the date of commencement, and in this case, post-pioneer is 1st January 2018 to 31st December of that year, which will be 31st 12 2018. Are we together? So your first year of assessment will be 2018, and your second year of assessment will be 2019. Okay, of course, and the basis period will be from date of commencement up to 12 calendar months, of which you are still repeating the same date for the first year, going by the commencement rule. Okay, so that's that for the old provision. And the third year states that you identify the accounting date, the year end of the company. You identify the year end of the company, and you do what? You assess the company, you identify the year end of the company, and you count 12 months back. So if the company has commenced operation, all well and good, and if not, you apply your second year basis period for the third year of assessment. So in most cases, so that, in fact, that's one of the reasons why the Finance Act is very, very much useful for us, and is a good one, because it has abolishes the issue on gapping and overlapping in our basis period. Okay, now let's continue with my first illustration on pioneer legislation. So if my fourth year is 2022 year of assessment with a basis period from 1st January 2021 to 31st December 2021, being the date after the pioneer period. Okay, so my 5th year also is for me, okay, to identify from the first day, from the first day from the first day after the last basis period, which is 1st January 2022 to 31st December 2022. Okay, so I have 2023 year of assessment. So don't forget that in this illustration, the company's year end is 31st December of every year. So it coincides with our last day of pioneer period. Okay, so where the company accounting year end is a period during the government's fiscal year end, for instance, maybe September 30th. Okay, so our 4th year will be what? Will be from the first day after the end of the pioneer period up to the company's accounting year end, because the provisions of the Finance Act of 2019 on the commencement rule states that you start from the date of commencement of the company to its first accounting year end. So in this case, which will be 30th 09 2021. Okay, it will be 1st to 30th 09 2021. So it will give us a period of less than 12 months. However, for second year, we are still assessing based on PYB, and it will be from first day after the last accounting year end date, which will be 1st October 1st 10 2021 to 30th 09 2022. So of course, that would be my 2023 year of assessment. It will be my 2023 year of assessment. Are we together? Do you understand? Hello, do you understand? Okay, so I believe you're on the same page. Sorry. Okay. Mr. Kinshikpe, your question for revision of the advanced taxation. Do you advise we cover from 2014 to May 2021, or can we just focus on the most recent years as time is quite short? Okay. It depends on you. Okay, so I can't give a general advice on that. It depends on your type. We have more time. We have time. Some has taken or has been on leave, maybe probably from 2 weeks ago. Okay, I know of some organizations that do give their staffs 3-4 weeks for examination leave. Okay, so that's that. Let's check for other question. Okay, Yes, of course, Abosede. The aim of this class is to teach how to answer questions and the techniques to use. Yes, that's good. Also, is to guide you on areas of concern, okay, where you're having issues on a particular topic, okay, because we never can tell. Uh, we don't know where which angle ICAN is coming from, okay. So that's that. Uh, Onyebushi, sir, can you please summarize the new commencement rule, cessation and change of accounting date? I think I've taken that, but where you feel that you still need more explanation, please do not hesitate to drop your comment. Benson is asking, oh sorry, okay, Benson is asking if the new Finance Act affects petroleum profit tax. Yes, of course, it affects. Prior to the introduction of the Finance Act of 2019 and 2020, companies operating in the petroleum industry do not pay tax on dividend, but now that provision has been amended, and any dividend paid out of profits from uh, companies operating in the upstream sector of the oil and gas will now be subject to tax in the hands of the owner. Are we together? Okay. Uh, Someone is asking, sir, kindly throw a little light on digital economy taxation. Yes, of course. We are going to do that, but I will appreciate if you can be specific because of time. Okay. Uh, okay. With regards to Finance Act of 2019, I can say that Finance Act of 2019 uh, brings about the significant economic presence in determining the taxation of digital transaction. Okay, so we have the significant economic presence order, that is the ministerial order on the significant economic presence. Please, if you have Google Chrome, uh, kindly go to your Google, type the significant economic presence ministerial order of 2020. Significant economic presence order 2020. Are we together? Okay, so however, after you must have done that, if you still have any inquiry or queries, please do not hesitate to drop them on our Telegram platform, so that every other member of the class can benefit from my responses. Okay, so Mba is asking, please, what is the tax implication of compensation for loss of office, and what is the required due date for any tax arising from such? Okay, first to know is that compensation for loss of office is guided by the Capital Gains Tax Act. Compensation for loss of office is guided or is addressed under the provisions of Capital Gains Tax Act. And this, of course, the Finance Act, prior to the Finance Act of 2019, where an individual receive compensation for loss of office up to the amount of 10 million naira. Okay, you have to pay what? You have to pay capital gains tax at 10%. You have to pay capital gains tax at 10%. Okay. However, the Finance Act of 2019 has amended this provision and states that uh, any individual that receives loss for compensation that receive compensation for loss of office, that receives compensation for loss of office will that receive compensation for loss of office to the sum of 10 million naira. Okay, between 10 million naira or less are exempted from paying capital gains tax. they are exempted from paying capital gains tax. Okay, and also the Finance Act of 2020 order also amends this provision further by stating that uh not only that if you have compensation for loss of office up to the sum of 10 million naira, you have been exempted from the payment of capital gains tax, but it also includes where an individual receives compensation for loss of office above 10 million naira. Maybe for instance you receive 13 million naira. Okay, so firstly 10 million naira will be taken off as an income, that is as what, as a gain, because compensation for loss of office is a gain and not an income. Okay, so that's why you can't see it under personal income tax or company's income tax. Okay, so it is a gain, and that gain of 10 million naira is fully exempted from tax. Not only that, if you receive 10 million naira or less, even when you receive more than 10 million naira, you have to take away first your 10 million naira, and what will be subject to capital gains tax is the excess of that 10 million naira. So in your case where you have 13 million naira, what you are subjecting to capital gains tax is 3 million naira, and the appropriate rate is 10%. So capital gains tax has a flat rate of 10% on the chargeable gain. Are we together? Okay, and the due date, you have to pay it within 6 months from the date you receive the payment. Okay, so it is assessed based on actual year basis and not on preceding year basis. Capital gains tax is assessed on actual year basis and it must be paid within the year which it was received. Are we together? Okay, so if you have more queries, please do not hesitate to drop them. Now let's start with question 1 of our practice question. This question is a live case question. Okay, it is a case study question. So what we need to do first is to go to the requirements of the question. Let's go to the requirements of the question. Yes, this is a compulsory question with 40 marks. As you are required, as the company's tax consultant, you have to prepare a report. As the company's tax consultant, you have to prepare a report to management of Sunshi Limited. You have to prepare a report. Okay, you have to prepare a management report of Sunshi Limited, taking into consideration the following: resident and non-resident companies. What's the provision of the Company Income Tax Act as far as residents and non-resident companies are concerned, and the circumstances under which profits of a non-resident company will be liable to tax in Nigeria. Circumstances under which profits of a non-resident will be liable to tax in Nigeria, and the relationship between a Nigerian branch and the parent company, Nigerian subsidiary and the parent company, overseas branch of a Nigerian company, overseas subsidiary of a Nigerian company, and advise on, if any, the company's income tax payable by the two business operations in Nigeria. The company income tax payable by the two business operations in Nigeria. Are we together? Okay. Now we can read the case study or the scenario given by the examiner for us to have a better understanding, because this type of question is an on-case question. we have to make reference to the provisions or to a specific paragraph of the case study. Are we together? Okay. Now, but before we do that, while we are taking you guys on tips for this exam, so we are advised not to attempt questions that will go most of your time. Okay, question that will consume most of your time, or that will weigh you down in the exam. So I've read the requirements of the question, and with this, an ordinary student may consider this question as a tough question. An ordinary student may consider this question a tough question, and if I were you, I will not attempt this question first. Okay, so before rushing into this question, I would like to take my time going through other questions and see where I'm good to go, where I can profile my suggested solution without wasting much time. Do you understand? Okay. Click on share to have a copy of this on your timeline. If you are just joining, welcome to the class. Please kindly type hello in the comments box and your location so that I can acknowledge you. If you have any question, kindly drop it on the comments box. In regards to this again, what are your greatest fears for this coming exam? Please kindly drop your comments in the comments box below. Okay, now we have question 2. It looks like a case study question. Okay, so instead I will rush to the requirements of the question. I will first check on the requirement of the question and see if it is what I can provide suggested solution to in quick time. Okay, required discuss the stages involved in domesticating a double tax agreement treaty so as to become enforceable in Nigeria. Discuss the stages involved in domesticating a double tax agreement treaty so as to become enforceable in Nigeria. Okay, so this is like an off-case study question. Okay, irrespective of what the examiner the picture or scenario the examiner has built here in the question, so I can still provide my suggested solution on this without making reference to the body of the case study. Also, we are to state the likely benefits to the contracting state. Likely benefits to the contracting state. So knowing fully that this question 2 is one of my section B question which has 20 marks, so my A and B should at least give me 15 marks. Okay, or 10 marks. Now let me check for C. By applying the provisions of the double tax agreement treaty, compute the tax savings to company TPNL and TPI based on the information below for the year ended 31st December 2018. You have to show workings and state any assumptions you have used. Okay, so this C should not take much of my time. What I've been asked to do is just to compute my tax savings. Taking into consideration the implication of the double tax agreement treaty. So for this, I may have to make reference to the question given by the examiner. To the case study printed by the examiner. And D, in D, we have been asked to explain the term franked investment income. Explain the term franked investment income and describe its relevance, if any, to TPI. So TPI is a company given in the case mentioned is a company mentioned in the case study. Okay, so for this I may make reference to the case study given in the question. Are we together? So ordinarily, frank investment income are what? Are income that have already been subject to tax in the hands of the recipient. Okay, so they have already been what? They have already been subject to tax. For instance, dividend received by a company from another company after deduction of withholding tax is regarded as what? Is regarded as franked investment income. Is regarded as franked investment income in the hands of the recipient company and shall not be subject to any further tax as part of the profits of the recipient company. Okay, so the concept of franked investment income is that the dividend has been paid out of a profit that has been subjected to corporate tax before. Okay, so and if it is under personal income tax too, it is still the same concept as the what the profit has been subjected to corporate tax before, and as such should not be further subject to any should not be subject to any further tax. Are we together? Okay, so that's that. And for I've been asked to explain the term fees based. We are asked to explain the term fees based or permanent establishment, fees based or permanent establishment for corporate income tax purposes. For corporate income tax purposes, and we are to the circumstances under which circumstances under which TPNL may constitute a fees base for TPI and the possible implications for both companies and possible implications for both companies. You all agree with me that this question is fully loaded? Okay, and F, you have to advise the group whether or not the Nigeria's transfer pricing regulations apply to their intercompany transactions. Advise the group whether or not the Nigeria's transfer pricing regulations apply to their intercompany transactions. Okay, so this question is fully loaded and it requires what? It requires more time. Okay, so if I were you, I will what? I will leave this aside and move to other question. If probably I can find the one, if probably what I can find the one I know I can attend to within 20 minutes max. Okay, within 20 minutes maximum or 30 minutes max. Okay, click on share to have a copy of this on your timeline. If you are just joining, welcome to the class. Please kindly type hello in the comment box and your location so that I can acknowledge you. If you have any question, kindly drop it on the comments box. Okay, and let's take some of our comments. Okay, someone is asking what year is the question? Okay, the question should be May 2020 question. Okay, if my memory serves me right, it should be May 2020 question. Okay, it should be May 2020 question, or March July 2020 question. It should be March July 2020 question. Okay, are we together? Oh, sorry. I think question 2 is March July. Question 2 is a March July 2020 question. And question 1, Sunshi Limited, that should be uh some minutes please. Okay, the question is November 2018 question. Okay, the question is November 2018 question. Okay, so okay, someone is asking for more explanation on minimum tax. When are we applying the new Finance Act? Okay, when are we applying the new Finance Act? Olubumi, the Finance Act takes effect from January 13th, 2020. Basically, it has become effective. Okay, it becomes effective in 2020 year of assessment. Okay, so for the minimum income tax, the minimum income tax, the Finance Act of 2019 amended the provisions of the minimum income tax, that's section 33 of SITA. Section 33 of SITA. Now, companies that report operating losses during the year will now be assessed to tax on at 0.5% of what? Of their gross income. 0.5% of their gross income. However, this provision is what is in line with the Finance Act of 2019. However, because of the pandemic in 2020 and the EndSARS issue, okay, so the Finance Act of 2020, the Finance Act of 2020 further reviews the amendments on minimum income tax provision as of 0.5% to from 0.5% to 0.25% to 0.25% only for a basis period that falls in between 1st January, only for basis period that falls in between 1st January 2020 to 31st December 2021. Please note that both dates are inclusive. Both dates are inclusive. Both dates are inclusive. Okay, so and when you are computing your minimum income tax or minimum tax, your gross income. Okay, your gross income is now defined as income from both your primary business activities and your passive income, that is both your active and passive income. Okay, in other words, they are your revenue, okay, or income from business activities plus other income such as investment income, dividend income, rent, rental income, etc. Are we together? So all form of income. Okay, so you determine your gross income first, then you deduct your frank investment income. You deduct your frank investment income. So for minimum income tax purpose, frank investment income are income that had already suffered corporate tax. Okay, so and as such, they should not be subject to further tax. Are we together? So after that, then you can now apply your 0.25% if the year of assessment falls between 1st January 2020 to 31st December 2021, both days inclusive. Are we together? If otherwise, your minimum income tax should be 0.5% of your gross income. So in some cases, it may be your net gross income, your net income, that is gross income less frank investment income. Are we together? I believe I've answered your question, Olubumi. Okay, Abdulwasil, you are welcome from Abuja. How are you doing today? How is Abuja today? Okay, Rashida, you are welcome from Ilorin. How are you doing? Okay, I believe. Okay, Bensi, I believe I've answered your question. But if not, please do not hesitate to drop that on our Telegram platform. Okay. Okay, Ogunfowora from Lagos, you are welcome. So I think we can continue with the class. Click on share to have a copy of this on your timeline. If you are just joining, kindly type hello in the comments box and your location. Welcome to the class, so that I can acknowledge you. So question 3 goes thus: in respect of transfer pricing regulations, in respect to transfer pricing regulations in Nigeria, describe the following. You have to describe arm's length price, describe items that constitute controlled transactions, mention any 10 main items that will feature in the disclosure and declaration forms to be submitted to the Federal Inland Revenue Service. Mention any 10 main items that will feature in the disclosure and declaration forms to be submitted to the Federal Inland Revenue Service. Of course, this question is a good to go question. If you are familiar with transfer pricing, you should be able to provide suggested solution to this question within 20 minutes max. Within 20 minutes max. Firstly, you were asked to describe what arm's length price is. Ordinarily, arm's length price is the price charged for the transfer of goods services, or intangible property between connected taxable persons, which corresponds to the price that would have been charged by independent persons under similar circumstances. That's all. Arm's length price is the price of which goods can be exchanged between knowledgeable buyer or between knowledgeable market participants at what? At a controlled price. Okay. Sorry, between knowledgeable market participants at what? At the market price. At the market price. Okay. At the market price. Are we together? Okay, so we also to discuss items that constitute control transactions. These are sale and purchase of goods and services, sale, purchase or lease of tangible assets, provision of services, lending or borrowing money. So what are the control transactions? Means the transactions that may occur between related parties. Are we together? And then the B part we have to mention any 10 main items that will feature in the disclosure and declaration forms to be submitted to the Federal Inland Revenue Service. Yes, of course, any form you are submitting, the particulars of the reporting company or entity is a must. If you are filing your tax returns, the company's particulars is necessary. So also for your transfer pricing, disclosure and declaration forms, okay, return filing, you need the particulars of the reporting company, particulars of immediate parent companies, where applicable, particulars of directors of reporting companies. You need also the particulars of major shareholders of reporting companies and related parties, and among others. Okay. Also, you need the particulars of persons making the declaration. Okay, so if it is the company that representative that is making the declaration, you put it there. Okay. Also important, you need the particulars of the external auditors of the company as well as their tax consultants, and equally the company secretary as well as the company secretary. So you need their particulars. So click on share to have a copy of this on your timeline. If you are just joining, welcome to the class. Please kindly type hello in the comment box and your location so that I can acknowledge you. If you have any question, kindly drop it on the comments box. In regards to this DIET ICAN exam, what are your greatest fears? What are your greatest fears? What are your greatest fears? Are we together? Okay. Kindly drop your comments now. Kindly drop your comments now. Hello. Okay. Let's check for your comments. Oluwadamilola from Lagos, you are welcome. Okay, since there are no comments, okay, Adebola Aziz Adebayo from Lagos, you are welcome. Now let's proceed. Now question 4, you have to briefly explain a transfer pricing document. What is a transfer pricing document? State any 3 key transfer pricing documentation and state key features of a transfer pricing policy. Okay, so my question 4 is the first question in section C of my exam, and it has 15 marks. So ordinarily I can allocate marks to each of these questions. That is, each of these questions has 5 marks each. So what will it take me to explain transfer pricing documents if I know it? Okay, a transfer pricing policy is a document that guides the conduct of related parties transaction within a group of companies. Simple. It is a what? It is a document. It is a document that guides the conduct of related parties transactions within a group of companies. So there are 2 types of transfer pricing policy or transfer pricing documents. Okay, one, we have the group transfer pricing policy, we have the group transfer pricing policy, and we have the individual company or local transfer pricing policy. That is, we have the group policy and we have the company policy. Are we together? That's that. And then B, we were asked to state any three key transfer pricing documentation. State any three key transfer pricing documentation. B, they are transfer pricing policy, 2, we have transfer pricing compliance report, and 3, we have transfer pricing returns. That is transfer pricing declaration and disclosure form. The transfer pricing returns comprise of transfer pricing declaration, and then disclosure form. Transfer pricing declaration and disclosure form. That's that. Okay. Also, we are to state key features of a transfer pricing policy. If I may ask you, what are the features of transfer pricing policy? Of course, 1, they are typically prospective in nature. That is, they are futuristic. Okay. And typically not updated unless there are significant changes in business. And also, it provides a future view of likely intercompany transactions. Also, it provides guidance on pricing of the transactions and methodology. Are we together? Okay. Click on share to have a copy of these on your timeline. If you are just joining, welcome to the class. Please kindly type hello in the comment box and your location so that I can acknowledge you. If you have any question, kindly drop it on the comment box. In regards to this direct ICAN exam, what are your greatest fears? Kindly drop your comments now. Okay, someone is asking briefly summarize capital allowance and API effects in PPT. The American Petroleum Institute gravity or API gravity is a measure of how heavy or light a petroleum liquid is compared to water. So if it is API gravity, if its API gravity is greater than 10, it is lighter and floats on water. If it is less than 10, it is heavier and sinks. So it is thus an inverse measure of a petroleum liquid density relative to that of water, and it is used to compare densities of petroleum liquid. So for example, if one petroleum liquid is less dense than another, it has a greater API gravity. Although API gravity is mathematically a dimensionless quantity, it is mathematically a dimensionless quantity, and it is referred to as being in degrees. It is referred to as being in degrees. Okay, so API gravity is graduated in degrees on a hydrometer instrument, and the API gravity values of most petroleum liquids fall between 10 to 70. Falls between 10 to 70 degrees. Are we together? Okay. Are we together? So what are your greatest fears for this coming exam? What are your greatest fears for this coming exam? Okay. Question 5. Let's go to the requirements first. Okay. In question 5, we were asked, as the company tax consultant, you have to draft a report to the managing director explaining the following. Draft a report to the managing director explaining the following. The preparation which you and the company should make before the commencement of the proceedings at the tribunal. The preparation which you and the company should make before the commencement of the proceedings at the tribunal. Steps to be taken by the company if the decision of the tribunal is not acceptable to it. Steps to be taken by the company if the decision of the tribunal is not accepted to it or acceptable to it. Then the tax implication of the company's proposed transportation business. The tax implication of the company's proposed transportation business. And in the part B, you are required to recompute the following: assessable profit, chargeable profit, assessable tax, chargeable tax, and total tax payable. Okay, so this question may take some of my time. So instead, I'd rather go for another question that I know I can solve within 20 minutes max. So within 1.5 hours, okay, I must have completed 3 questions. Within 1.5 hours, I must have completed 3 questions. Then the last 1.5 hours, another 30 minutes should be dedicated for another question, which is not the compulsory question, or let's say 40 minutes max. Okay, then my other 40 minutes, okay, or 50 minutes may be dedicated for the compulsory question. Okay, so at least do not use at maximum, try you don't use more than 30%, and 30 minutes for questions with 20 marks, and 15 minutes or 20 minutes for questions with 15 marks. Okay, so if you have exceeded this time and you are still on the question, you are still beating about the bush, please abandon or leave that question and go to the other ones you know more better. Okay, so after attending to those questions you are good up, then you can come back to the questions that are tough. Click on share to have a copy of these on your timeline. If you are just joining, welcome to the class. Please kindly type hello in the comments box and your location so that I can acknowledge you. If you have any question, kindly drop it on the comments box. In regards to this direct ICAN exam, what are your greatest fears? What are your greatest fears? Kindly drop your comments now. question 6. Before we read the body of the question, let's check our requirements as usual. Here we are required to compute the tax liabilities on the total income, stating clearly the double tax relief applicable to the company. We were to compute the the total income, compute the tax liabilities on the total income, stating clearly the double tax relief applicable to the company. Stating clearly the double tax relief applicable to the company. Now, I think this question is not much for us to attempt or to solve within 15-20 minutes max. Okay, so I think you now see the approach to solve questions in the exam. Okay, let me check if you have any comments. Okay, Ugo or Godwin is asking, how are we going to know when to apply the new Finance Act in the exam? Question. How are we going to know when to apply the new Finance Act in the exam? Question. Yes, I think I demonstrated that at the earlier sorry, I think I demonstrated that at the start of this class. Okay, so first to do is what is to go to the requirements of the question. For instance, if you have been asked to compute your total tax liabilities, okay, so already you know what to do. Then you go back to the body of the question. You first, if the company is a new company that has just commenced operation, you first identify the commencement date of the company. Okay, so if the commencement date of the company is, say, 1st July 2020, okay, so please know that you are applying the Finance Act, okay, of 2019 provisions on commencement. The provisions of the Finance Act of 2019 on commencement on commencement rule. Of course, this has abolished the issue of overlapping and gapping in the basis period. It has eliminate the issue of overlapping and gapping in our basis period. However, if the date of commencement given in the question is if the date of commencement given in the question is say 1st July 2019, okay, please note that you can't apply the Finance Act provision for companies that commence business on this date. Okay, so instead you use the provision of the old provisions on commencement rule prior to the introduction of the Finance Act, which states that for companies that just commence operation, that just commence business, you assess them to tax from their date of commencement. So their first year of assessment will be the year of commencement, which will be 2019. The first year of assessment will be their first year of commencement, which is 2019, and the basis period will be from the date of commencement, 1st July 2019, up to 31st December of that year. Okay, so that will be for your first year of assessment, which is 2019. Now, let's assume that the companies prepare its accounts to 30th September. The company prepares its account to 30th September of every year. The company prepares its account to 30th September of every year. So now, for this company, our next year of assessment should be 2020. Now, in 2020, the Finance Act has become effective. In 2020, the Finance Act has become effective, and as such, our basis period should be on preceding year basis in line with the provisions of the Finance Act. And if we are to go by that, our preceding year for 2020 should be 2019. Okay, so if it is 2019, and we are to do from the date of commencement up to the company's first accounting year end. So it will be from 1st July 2019 to 30th September 2019. Of course, this period has been tasked in our 2020 year of assessment, so as such, it should be crossed out. So meaning that in 2020 year of assessment, the company will not be assessed to tax. In 2020 year of assessment, the company will not be assessed to tax. So in 2021 year of assessment, the basis period will therefore be from the first day after the last basis period day, okay, in the last year of assessment, which in this case will be 1st January 2020 up to the company's next accounting year end, which of course will be 30th September 2020. Are we together? Though it's not a normal period, as it is not up to 12 months period of government fiscal year. Okay, so and the next assessment year will be 2022 year of assessment, which should commence a day after the last accounting year end, which is 1st October 2020, and we end in the next accounting year end of the company, which is 30th September 2021. Okay, 30th September 2021. So you can see that in our third year, we have a full year basis period, which is from October 2020 to September 2021. So this is how you continue, and that's where you can apply. Can you see the application of the Finance Act of 2019 as demonstrated there? Okay, please, if you have further questions to ask, kindly drop them on the comments box section, on our Telegram platform for us to address and for other students to benefit. Mrs. Akinshikpe, for questions with 15 marks, please ensure that you don't use more than 20 minutes on them. Okay, please manage your time. In fact, if I were you, before going for the exam, I will practice my time allocation. For questions with 15 marks, I should not use more than 20 minutes max. Okay, so out of 3 hours, if you can spend 40 minutes in your section C, and for questions with 20 marks, make sure you don't use more than 30 minutes max. So meaning that out of your 3 hours, 1 hour 40 minutes should be dedicated for 4 questions. Then your compulsory question, you have an hour and 20 minutes to address that. So in fact, for your compulsory question, which is 30 marks, you should not use more than 45 minutes, so that you can have about 30 minutes thereabout to go through your suggested solutions. Okay, so so that you can address any question or any areas you have given wrong answer, or you have not given adequate or relevant answer. Okay, wish you guys the best of luck in this coming diet, and I pray among you guys we are having best students. Okay, so go there and make us proud. Once again, wish you guys a good of luck in your coming exam. Thank you for coming to our live class today, 6th of November 2021. Goodbye.